Good evening, guys, and welcome to the Market Outlook. Firstly, I hope you all had a very good weekend. Spent some time back testing, spent some time reflecting upon sort of what went right last week, what went wrong, areas of sort of your game that you can improve on. And yeah, you've come into this week with a much more resilient mindset and looking to make it another profitable week. But in saying that, let's get into a couple currency pairs that I'm looking at for the week ahead. And yeah, some opportunities that we did take today, and several opportunities that we can sort of stack positions on, and new opportunities that I'm looking to take coming into Tuesday, Wednesday, Thursday, and ideally Friday. As Friday is a misleading day in the sense that people think it's a profit taking day from the bank's perspective, etc. But we saw some tremendous movement last Friday on the GBP USD trade. And if those of you are still holding it, I believe it's shooting to the 130, 140 RR. So arguably that's a 40% gain on one trade. But in saying that, I did have a full take profit in place, and I'm out of that position. But that's not to say I'm not looking for sort of re-entries on the bearish side. As long as we know what the trend is, we can always capitalize on continuation trades rather than reversals. Without further ado, let's get into this market outlook. So looking at the dollar index first, from a 4-hour perspective, so just looking at the sort of daily time frame, we did have this sort of major swing low, and within this sort of area here we could see sort of a accumulation schematic, which I am going to update the first volume of Wyckoff in the group. So yeah, do spend a lot of time understanding those 5 slides, etc. And as time goes on, day by day, I will continuously add several bits of information that will help not only improve but refine your Wyckoff game to the absolute T. And I've got some real gems to share with you guys, so that's something to look forward to. But yeah, just sort of scaling back on the dollar, we had this accumulation schematic here, and upon sort of this last down candle and then that gap in market open, which I do think is a valid area of interest in the near future, upon rebalancing and closing this gap. But the thing I'd say about that is, if we do come down to this sort of level, not only is that a imbalanced price range, we do have this last down candle before it basically this last down candle before that very bullish impulsive move that ideally broke this high, this price swing high, this price swing high, and this price swing high. And the reason I'm calling them prior swing highs is because they ideally are lower highs in this sort of bearish trend. So again, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and lower high. So these are prior swing highs that need to sort of that needed to be liquidated, and upon this last down candle before that move, we did see a very bullish take on the dollar. So where do I think dollar is going next? Again, we have a series of mitigations. If you actually look at these mitigations from a much in-depth perspective, we can see the mitigations are happening lower and lower. So we have this first mitigation here, and then a sell-off, second mitigation here, and a sell-off, again creating relative equal high, the algorithm engineering highs in order to sweep this liquidity, and sort of what's our next leg in price. I do believe it is to the downside. We could sort of look for a target as in a new bearish leg. As we've seen here, we witnessed quite a impulsive bearish move on the dollar, quite impulsive bearish move to the dollar. So is this just a correction slash a multi-complex pullback in order to go lower impulsively? Possibly. But what I'm liking on the 1-hour time frame is this raid on stops here by this candle here, and then we see that impulsive move that ideally took out these prior highs here. So yeah, I do believe this candle needs mitigating with. Upon a mitigation, I do feel there is higher prices on the dollar to reach sort of that 91,500 big figure is something I'm keeping in mind. But yeah, that's the dollar. I'm just scaling into the sort of 15-minute time frame just to give you a sort of more refined overview. So again, this is a typical distribution schematic happening. 3 drives to the high. We have that break in market structure from this low. And now what I want to see is a pullback possibly to this block here, or even possibly to this sort of sponsor candle slash block here. And upon that pullback, I ideally want to see a very bearish sell-off on the dollar. We didn't move too much today due to it being US bank holiday. So yeah, I'm expecting quite volatile price action for the rest of the week, as when we see a contraction range like this, or in our case what we can witness is a sort of distribution schematic. It basically means a lot of orders have been built up within this area here, and that's not necessarily bank orders, as sort of the banks are on bank holiday, don't get me wrong, but the algorithm is still programming, the algorithm is still running. Otherwise, how is price sort of functioning? But it's running on a very minimal level, in the sense that there's no major funds being placed in the algorithm sort of portfolio, etc. So yeah, I do expect some very nice price action tomorrow. It's just a matter of capitalizing on the Pacific session, the Pacific sponsor candle or institutional candle, etc. And just waiting for the opportunity to come to us. But that's what I'm seeing on the dollar. Euro USD, just scaling into the 4-hour time frame. So Euro USD is an interesting one. I am favoring higher prices, and the reason I'm favoring higher prices is if you look at this prior swing low here, upon sweeping it recently, we had this mitigation of this candle. So this was the last down candle before that impulsive move up. We had that correction phase to mitigate with this candle here, and upon that, price has been bullish ever since. If you listen to the last week market commentary, I did mention how the dollar on the monthly time frame sort of has these doji candles, etc., and how sort of sometimes doji candles, in the sense, don't really get respected as solid sponsor candles. They're not sort of good areas of interest to take a trade off. So what we actually had prior to that is a sweep below this low, and I think this is a major sign, in the sense that a lot of liquidity slash order activations has been done from this sweep of this prior swing low. So upon sweeping that low now, I do think we are going to see a lot of higher prices, and another confluence to that is this inefficient pricing here. So that's inefficient pricing. I do think this needs to be rebalanced with, and not just sort of like a correction phase. I want to see an impulsive move that rebalances this prior inefficient pricing. In saying that, above that we have got these equal highs. Now just above that we have got this last up candle before that bearish move that ideally took out these engineered lows, had that small pushback up to create them relative equal highs, and then ultimately sold off to take out this prior swing low. So I do think this candle holds weight, in the sense that there is a lot of volume just within this candle here, and it it contains a lot of orders present. So what I would favor is longs from here, and then ideally take a hedge position from here, and maybe find a retracement from this low to sort of wrong tool, from this low to sort of this high. Let's say we react from that area of interest bearishly. I would be waiting for a pullback into discount pricing, and then ultimately look for longs again to this last up candle before that very bearish impulsive move, and then look at this for a prior high to be swept. Upon a mitigation of this candle here, and we see that sell off, then this candle is no longer an area of interest. It's more a engineered high that needs to be swept, and same goes for this, and same goes for that. So there are sort of major areas of interest on Euro USD 1, 2, 3 that I'm looking at, but from a shorter term perspective, I am going to be eyeing up longs tomorrow London session. GBP USD trade we unfortunately missed out on. So I had my limits present around this area here, and I ultimately wanted to see a sell-off to our area of interest here, and then a bullish reaction to this area of interest, which I will explain in depth for this 15-minute area of interest, and then an ultimate sell-off to take out all these prior swing lows here. Arguably even these look like relative equal lows, but the reason sort of my target remains here is because if we scale into destroy a horizontal ray at the target, if we scale into the 15-minute time frame, what we have present is a or even we could extend our target to this block here, is a imbalanced price range, and in addition to that, just below we have this last down candle before that majorly bullish candle that engulfed all of this prior price action here and arguably broke market structure on countless different occasions. Rebalanced with this gap on market open to the T. So again, you know, just this gap here could have a whole different bias on your Sunday's analysis compared to Monday. And again, that is, you know, that's a 142 pip gap arguably. So that's a major gap. And you know that you got to take that into confluence. But this is my sort of target on GBP USD, rebalance with this imbalanced price range and come and mitigate this last down candle before this up move, as there hasn't been any prior price action to the right of it upon having that candle. So it is a good target for GBP USD. Explaining my areas of interest, scaling into the hourly time frame. Just remove these boxes for a second. So the first area of interest was this last down candle before that very bullish impulsive move that arguably broke market structure. But if we actually sort of look at this from a much smaller time frame, even 15-minute, I believe it was. So yeah, this was something I was sort of looking at, this candle here, this last up candle before that very bearish impulsive move that took out these sort of prior lows here, and to the right of it we hadn't really got that mitigation. In addition to that, we do have this last down candle before that move. So these are two sort of areas of interest of mine, and what we do here is, upon price coming to these sort of entries, we don't enter from a limit perspective. We wait for price to give us our desired reaction, which would be a bullish reaction, and then act accordingly. And I'll show you how we could have even capitalized on that on GBP JPY when I sort of cover that pair. But that's two areas of interest: an institutional candle and a sponsor candle present within those sort of zones there. So just sort of this area here. But unfortunately we didn't come to this price range. In addition to that, that was it. There was this inefficient pricing that had to be rebalanced with. So it looked like a good area to go long from, but unfortunately price did not meet our criteria. In a sense, it didn't fulfill our limits. But in saying that, there is a opportunity present, hopefully tomorrow, when sort of the US / dollar picks up a bit more volatility. Again, we did see a decent move on GBP USD for a bank holiday, you know, scaling in arguably 50-60 pip move. So if you did take this trade, maybe scaled in like we did on GBP JPY. I'd advise take partials, but yeah, in saying that, just looking at a possible re-entries for long tomorrow. Just looking at market structure on a 15-minute time frame, we are making higher highs, higher lows, higher highs, higher lows. Arguably that new higher high, scaling in from a 5-minute time frame. Just putting this on lock. We do have this prior swing low here that I feel needs to be swept. I was about to say mitigated. Needs to be swept. In addition to that, we do have these relative equal lows present over here. So I do believe this is a engage on buy side liquidity. Upon taking out buy side liquidity, we will then have that small retracement, ideally back to where, to this sponsor candle, the last down candle, before that very bullish impulsive move that broke market structure on 1, 2, 3, arguably 4, and now it looks like it's coming to that sort of fifth structural point there. In saying that, just looking at this sort of range over here, we saw these relative equal lows present here. Sorry, relative equal highs. We saw a sweep of liquidity, then again a major sell-off, broken market structure at this low, and again we did form these relative equal highs here. To a certain extent, yes, it was a mitigation, but I do still feel there is a mitigation with this sort of candle here. So yeah, what I mean by buy side liquidity is we could ideally just sort of sweep this range here. Maybe we get one more tap during Asia. Upon this, have a small sell-off, make retail think this is a triple top, have that raid, mitigate with that candle, add additional short positions, maybe even look to take a hedge trade if it's early during London. I wouldn't no way stay up during Asia, because this is UK timing, but even then Asia moves slow in reference to GBP USD, and it's just something you don't want to be in, sort of contradicting bias on a smaller time frame, as the sort of smaller time frames indicating bullish pricing, and there is a lot of buy side liquidity to be swept on a bigger time frame. We can look for sort of re-entry. So yeah, the re-entry would be at this sponsor candle here. We could even sort of refine this a bit more, sort of to this level here. So again, a 3.4 pip stop, and an overall swing target of 100 pips. The reason this is my target is because of this last up candle before that very bearish impulsive move on a 15-minute time frame. And in saying this, when we do reach this area of interest, what we can do sometimes is, instead of taking profit, we can hedge the trade. So this meaning you take enough partials, you take enough partial profits. So if you get stopped on the hedge trade, you're losing nothing, if that makes sense. And in addition to that, your risk on the hedge trade, let's say you risk 0.5%, automatically becomes 0.25%, as the trend will just continue in your favored direction from your first entry, if that makes sense. But yeah, that's just a small explanation about sort of hedging, an advanced way of scaling into majorly swing positions. Those of you who are sort of going through their FTMO challenges, etc., you're able to hold positions overnight, sorry, not overnight, during continuous weeks. So yeah, when you get funded, you have to close your positions by Friday 10 p.m. UK time, which is market close, but utilize that opportunity on sort of swinging your positions and trading less, because at the end of the day in this game, less is more. If you can find 1, 2, 3 opportunities that arguably pay you 1 to 10, 1 to 12, 1 to 15, 1 to 20, let's say you get 3 1 to 20s in a week, you're up 1 to 60, you risk 0.5% on that, you're up 30%. You understand? So you've got to understand how you can utilize that in your own trading plan, and capitalize those opportunities, both from a limit perspective and from actual market executions, in the sense that you know, if you're going to have a limit present, risk a bit less, if that makes sense. So because you can't sort of monitor the trade at that specific time, or maybe you're in America and the London session's a bit hard to trade, um, you know, while you're awake, etc. Factor all of that in and still set your limits, as in what you expect London to do, but just risk less, maybe 0.25%, maybe even 0.22%, as you know, for you to lose a whole 1%, you'll need to lose 5 trades straight, which is very unlikely with our strategy. But in saying that, and the risk to rewards we gain, as you know, even if we to lose 5 trades straight, if this trade plays out, that's a 1 to 27. So you've arguably made back, you know, 5, 10, 15, 20, 25, 5 times the amount, you know, if not 6 times the amount, if this continues and the hedge fails. So you understand sort of where I'm going with it. But yeah, the reason this is my 15-minute area of interest is because if we actually look at this price action here, we had this prior engineered high, that got swept. So this suggests that there is banks buying sort of this candle, this last down candle before that up move that swept this prior liquidity here, and upon that sweep we did have this large sell-off. So yeah, I do feel this area needs to be mitigated with. In addition to that, we do have this last up candle before that bearish impulsive move, and the reason I call it impulsive is because there's 3 consecutive Marubozu bearish candles together. So it's a good indication that price is going to continue bearish, which it has done. And I believe this was a trade we took to the T as well. And just to show you, if you know if you're still sort of holding, that's a 1 to 16, arguably 1 to 16, 1 to 17. And then if you got involved with this sort of hedge position, a confluence there with GBP JPY, as a 1 to 20, you know, just with this sort of we're 1 to 8, 1 to 9 up. But in saying that, do look to scale in GBP USD tomorrow, London and New York session. GBP USD, a beautiful trade today. Sort of minimal drawdown depending on where you took the entry, but this was the level I sort of gave out. Came into our 4-hour area of interest, and let me just sort of break this down for you now. Just looking at market structure, just keeping it simple. Looking at market structure, creating higher highs. This is still a higher low, as we haven't took out this prior swing low, right? As soon as this low gets taken out, then my whole bias changed. Did we raid the level? Did we have a solid body closure? What I mean by raid the level is this is considered a raid, right? There is no formal body closure above this prior high, so it's a raid. So even if we just raided it and then sort of had that structural move up, I could look for sort of entries on a pullback. But this is a clear indication of a bullish trend, as we made higher high, higher low, higher high, higher low, higher high, taking like this previous high here, higher low, creating engineered lows, arguably engineered highs here, double top, and basically illustrating to retail, you know, get short, and we see these massively bearish candles attracting retail to sell due to FOMO. Engineered lows created. Again, we have that higher, arguably this is the small structure here, higher high, higher low, higher high, higher low. We then have that higher high. Arguably now I think this is the next higher low in order for us to create that new higher high and take out this prior high here. So yeah, we got a nice entry on that. I believe this was a 5.1 pip stop, and overall we're targeting a 1 to 47 RR. So yeah, this looks like a favorable trade. Just scaling into the smaller time frame and just show you what I was looking for and how you can sort of capitalize from an area of interest point of view. Yes, limits are good, etc., but how we could have capitalized this on a smaller time frame. So again, we saw structure have this bullish reaction, a small pullback. Again, what we see here now straight away is a shift in market momentum. I'm not this is just gave me a hint on a reversal is due. Not necessarily a reversal, but a shift in market structure. As you know, there is a failure to create a new lower low to raid this sort of low here. So upon that, I wait for a break in market structure, which we had present. And then I look for, okay, where did this break in market structure take place? It took place from this last down candle before that I moved. So I know this last down candle here contains a lot of volume, and banks are buying up this move as it's took out these sort of relative equal highs here and arguably this previous high here. So now it looks like we are sort of forming an uptrend. Higher high, higher low, higher high, higher low, higher high. So he broke market structure on another occasion here and arguably a new higher low, and you could class this as relative equal highs, but if I was just to zoom in and so we can get an idea of the sort of pipette scale, we did make that new higher high. So I knew institutional order flow was bullish now, and what I look for in this scenario here, let me just sort of delete this for just a second, or yeah, let me just sort of hide it. It's better. So what I looked for in this scenario here, if I scale into the 3-minute time frame, you'll be able to see it a bit more clearly. We had these literally perfect equal lows here. So again, what does the algorithm do? It intrigues retail to buy at this level. Why? Because they think, you know, average people who go on baby pips, etc., they don't really look for formal education. They just look for sort of technical analysis, indicators, or anything that can help with their retail price action. And this is one of the common patterns: double tops, double bottoms, etc., head and shoulders, all of that stuff. But in saying that, we did have this double bottom here. We had that small push up, and it's quite a strong body closure, indicating to retail scalpers to take this long, and where this stops going, ideally below these lows here, possibly even below this low here. But in saying that, we knew from a 5-minute perspective this candle needed to be mitigated with, and if we look at structure just over here, we had that push up, two very strong body closures, and just look at these sort of bearish candles here, very small, choppy, etc. So we know the overall momentum is bullish now. Upon having that push up, where did this push up come from? This last down candle before that unmove. So we mitigated with this sponsor candle here, and then price had flew ever since. But yeah, upon mitigating with that 5-minute candle, we did have a raid of these prior engineered lows here. So that's an extra confluence as well, in the sense that liquidity has been gained from that momentum. And just getting back onto the 30-minute time frame, 15, sorry. So yeah, in saying that, that was a good confluence in order to go long, and then we've seen bullish prices ever since. So where do I think price is going next on GBP USD? Just getting back into the 5-minute time frame. Again, we had this prior engineered high here that's now been swept very impulsively. But what I want to see is this same sort of price action here present, just from a sort of 15-minute figure / 5-minute, but just see it a bit more. So again, we had 1, 2, 3 drives to the high. Then we ideally had arguably a break in market structure, but more so it was a raid. Retail will look at this as a break in market structure, but we knew this candle needed to get mitigated with. Upon a mitigation, we then had that bullish move up. But just sort of looking at this price action as well, there's a lot of things that are common with this setup and this setup, as price tends to repeat itself quite often, especially on the smaller time frames, is we did have this inefficient pricing present within this level here. So upon having that impulsive move bullish, we did form imbalance, which need to be rebalanced with. Upon the rebalance, we did have a break in market structure, etc. So my next area of interest is this last down candle before that very bullish impulsive move that left imbalance here. In saying that, we do have these relative equal lows present that need to be swept. And yeah, it looks like we're having that same drive to the upside, 1, 2, 3, arguably 1, 2, and a third one, maybe to this sort of that last up candle before that down move to this area here. So we can have one more push up and then ultimately a sell off during Asia, and look to take another entry upon here and then swing this higher. My overall target is a sweep of these engineered highs here. These are relative equal highs, and I do believe a major sweep is due. So if we just get into the weekly time frame quick, yeah, what I'm basically targeting is just getting into the weekly time frame. What I'm basically targeting is so no, not that high, but this sort of candle here, this last up candle before that very bearish impulsive move on a weekly time frame. Upon there is a very nice swing entry from a bearish perspective on GBP JPY when we get a mitigation of that candle there. So again, you could be looking at the sort of 1 to 300s, 1 to 400s, depending on how much you refine it, and the pinpoint entry we get. But right now, institutional order flow is bullish, even on a bigger time frame, as even on the weekly we are making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and it does look like it wants to make one more higher high to mitigate with this candle and then ultimately have that sell-off. The next on my list is AUD USD. This was a pair that we did get stopped on, unfortunately. But if you look, we just got stopped by 2 to 3 pips, and then we've had that bullish sort of reaction. So in saying that, there is bullish momentum within this market here, but it sort of brings back that conversation that we just had on GBP USD about, do you set the limit, or do you wait for price to react upon an area of interest in your favored bias. So for example, if we had this as our 4-hour area of interest and we waited for sort of more structure to form, etc., we can capitalize accordingly and arguably even get more refined risk to rewards. But by having limits, etc., what it's to a certain extent like is having your trading account on autopilot. And what I mean is there's several different limits placed on several different trades, meaning as soon as price hits that specific point, you're in the trade without you sort of having to do no effort in looking at the trades, refining it on the smaller time frames, understanding where the majority of liquidity remains, etc. So I do think it's a much more valid option to refine your entries on the Pacific session, for example London on a GBP pair. The sort of confusing thing about AUD USD is, yes, it moves in New York, but it also moves in Asia due to it also containing the Australian dollar, the Australian sort of currency pair. But what I think next is going to happen on AUD USD, I still think there is some bullish momentum to this. And the reason I say that is because there is a shift in market structure to a certain extent, as we have that last sweep of prior liquidity. We had those engineered highs there, we've broke through it, ideally created a higher high, higher low, higher high, higher low, now a higher high, and it looks like we are wanting to form a new looks like we are forming a new higher low. So if I just refine this entry to our re-entries or next area of interest, this sort of over here would be my invalidation zone, and this area here would ideally be a good point to take a entry from. So this is what I'm looking at AUD USD. Again, stops can be refined to this sort of candle here. The reason I put into this candle here is if we break market structure down just a bit sort of further, even on a 1 minute time frame, as price is fractal, whatever happens on the macro time frames will happen on the micro time frames. But if we just look at this price action here, we did have this sweep of sell side liquidity / double bottom here. In addition to that, we had that push up. And looking at this market structure in a bit more in depth, we did have that breaking market structure. Again, that bearish candle is not random. It's come and mitigating this prior manipulation that took out these relative equal lows. Upon taking those relative equal lows out, we did have that next structural push, higher low, and then sort of being in a contraction range. But in saying that, there is no mitigation within this sort of candle area, so we can even go as far as saying this has been a sweep on this prior engineered low here. We've had a mitigation of this candle here, and the next area of interest is this sort of last down candle before that bullish move up that took out these prior double tops here. So we can even refine our sort of entry to that candle there, and scaling into the 15-minute time frame, see how much that sort of impacts it. Now we've got a rough structure on what we're dealing with, but in saying that, scale it a bit more, this is sort of a comfortable price range. As we know, within this range here we are going to see some form of price action, regardless if that be mitigation, an impulsive move, etc. We are going to see some price action form here. So we could even look at this as an area of interest, or we can sort of enter it as a limits but with a low risk. What do I mean by low risk? So if you're trading with a prop firm like FTMO, etc., and if you're actually funded by them, you can't hold positions over the weekend and into the next week. So with limits, I would ideally look to sort of risk maybe 0.15%, maybe 0.2%. And this is the thing about limits, is they could stop you out, as we saw on AUD/USD, and move in your favored direction, because there is no way of you gaining a structural understanding on the smaller time frame when a limit is present on, is it going to go in my favorite direction or not. Now we've got a bit of price action to work with. We can understand there is sell side liquidity below these lows, and there is a lot of buy side liquidity above these highs. So yeah, it looks like a favorable area of interest, but just scaling in on the 15-minute time frame. Look at these swing highs that need to be liquidated. I mean, they're just too clean. Equal highs here, equal highs here. So again, upon the right entry, this can fly, and this is a 3.2 pip stop for a possible 100 pip profit, and that's a 1 to 30 in itself. In saying that, we have created relative equal highs here, so we could ideally take these out, in ideally these highs here. But if we actually look at structural points from a 4-hour time frame, we are making lower lows, lower highs, lower lows, lower highs. Arguably sort of made that new lower low here, but in doing so, we had that sweep of that buy side liquidity / engineered high present over here and over here. Again, a lot of sell side liquidity has been used with this institutional candle, the last down candle before that on move. So I do feel a lot of mitigation will be done in that area. Would I look to take full profits there? No, I'll probably have about 30% of my position still remaining. But what I'll look to do is take a hedge trade, and I believe I explained this on this video in GBP USD. So yeah, another sort of example on a hedge trade, and maybe we can even come and liquidate these relative equal lows here and rebalance with this imbalanced price in there. NZD USD, a beautiful trade called in London. Not the sort of reaction I sort of desired for, but nevertheless we tapped into our limit, and we've had that bullish reaction up currently about 20 pips. So again, if you still got this limit present, I will definitely recommend putting your stops to break even. But yeah, just a quick explanation on why I put this limit here. We had this sweep, well, I wanted to see a sweep of this sell side liquidity here. Again, these look like relative equal lows anyways. In addition to that, just scaling into this sort of time frame here, this price action here, we have relative equal highs. Above relative equal highs, I look for the next sponsor candle. Above relative equal highs or relative equal lows, or even double tops or double bottoms, I look for the next sponsor candle, and that basically shows a willingness of mitigation and for funds to add additional buys / sell positions on that specific sponsor candle upon mitigating with previous contracts / orders, etc. But yeah, this was the last down candle before that very bullish impulsive move that ideally broke this market structure high / prior swing high. And then we've had a small correction down and had that bullish rally since. Again, this is like rally base rally. in the sense that we've had two sets of pushes to the upside and then ultimately sold off to mitigate with that candle. Now, do we have that second wave to the upside? I personally think yes. Upon that next bullish impulsive move, I would like to see a mitigation of this last up candle before that very bearish impulsive move, and this last up candle before that impulsive move. And this was actually just taken on the 4-hour time frame. I found this sort of body of the candle, found the mean threshold, and look for an entry there. 7.5 pip stops for a possible 200 pip take profit. In saying that, I'm going to hedge my position in these two areas of interest. Yes, there's two different areas of interest. The reason there is two is because, as explained, this is a sponsor candle with engineered highs here. More specifically, a perfectly balanced double top. But in saying that, this could also be an engineered high that the algorithm looks to sweep in order to mitigate this candle here, as we've had no prior price action here. What I mean by that is there is no candlesticks that have mitigated this candle to the right of it. So yeah, that's an area of interest of mine. Another sort of reason why I'm taking interest on this candle as well is because if we actually look at this candle as a whole, we did have this imbalanced price range present over here, right? You could even call it here, and this candle rebalanced with that price range to the T and then ultimately sold off. So you know, the objective with this candle was take out buy side liquidity present with these lows here, rebalance with price there, and ultimately sell off. So I do think there is mitigation with that. How I would diversify this risk: 0.5% on this entry, 0.5% on this entry, totaling out a total of 1%. So yeah, that's NZD USD. Ultimate targets would be a sweep of these relative equal lows here, and a target same with GBP USD into this imbalanced price range and this last down candle before that up move that broke this prior swing high. Gold, just looking at gold on these sort of bigger time frames, 4-hour time frames, we are forming higher highs, higher lows, higher highs, higher lows, sort of that higher high, but we've impulsively broken market structure. And I think it's too early to be calling a bottom on gold. I feel right now it's like holding a falling knife. You're not gonna know which side or which end you're gonna catch it. So ideally that means you're gonna cut yourself. So right now I just feel like this is a contraction range, and scaling into the hourly time frame, this is actually an advanced schematic, a redistribution schematic, which we don't see present all the time. And I'm going to introduce Wyckoff as a whole, but just briefly explaining, we did have those free drives to the high. In addition to that, we have that sell-off that broke market structure here, had that mitigation, ultimately had that first sell-off that took out this prior liquidity here, formed these relative engineered highs. Same thing again, we had that retracement. My first area of interest, I believe I called this, was at this high here. So I wanted to see a sweep of these relative equal highs here and then a majorly impulsive move. But it didn't tag us in. But imagine if we sort of got tagged into that trade there. Entry would have been here. Stops would have been literally at the top of that candle. If it goes above there, it's invalid. 14 pip stop. And I wanted to see a 100 pip sweep of that prior low. So that would have been a 1 to 35 on gold, and that's a fantastic reward, especially on gold. But what's even more impressive is that small stop you can gain. So when you refine it and you understand what sort of schematic you're in, we're on a redistribution schematic. So it basically suggests lower prices. So yeah, this was my first area of interest, mitigation of this bodied candle, a hedge area of interest. And the reason I called it a hedge area of interest is because I want to see a price lower, and then we come into this area of interest and may look for longs, and then we see a price higher. So yeah, that was my bias on a hedge entry, but we didn't actually get that initial tap into this area of interest. So from both perspectives, short and long. There is no trade valid as of yet. But my second area of interest is this. Let me just quickly show you. Is this inefficient pricing here? So if I just remove this area of interest here, we do have this gap that needs to be rebalanced with. So yeah, upon that rebalance, I would like to see a major sell-off. In addition to that, we do have this last up candle before that very bearish impulsive move. So yeah, that's another thing I'm monitoring. But yeah, those are two areas of interest. It could react off, but I just don't like this sort of price action here. I don't feel that this is a valid sort of sponsor candle, hence why my area of interest is at inefficient pricing. I don't feel these sort of candles are or did create enough momentum in the market to ideally sort of see that majorly sell off. So I don't feel there's a necessary of mitigation as such. So yeah, my next area of interest is this inefficient pricing / imbalanced pricing present on the 15-minute time frame. And last but not least, something that's coming towards our limit slowly, but I reckon we'll have an impulsive move tomorrow, as today was US bank holiday, but is USD CAD. So again, just looking at market structure on USD CAD on a smaller time frame, just copying these. So again, looking at market structure, lower low, lower high, lower low, lower high, lower low, lower high, lower low to create relative equal highs. But look what we see present. Relative equal lows. But same thing we're seeing present on Euro USD. So notice how this low was a engineered sort of swing low, but we saw a sort of sweep to the pip. And then in reaction we saw a load of doji candles and then that massive bullish rally. So we're seeing a similar thing present on USD CAD right now. So I do think the overall institutional order flow is bullish, especially after this continuous rally, as we've had a countless amount of bullish candles. Had that small pullback to this institutional candle, the top of the range sort of over here. Upon that mitigation, we've had that next leg higher, but in doing so, we've formed a lot of imbalance that need to be rebalanced with this area here. Then I scale into the 30-minute time frame, and we have this last down candle before the up move. So this is a clear sort of area of interest of mine, and the reason it is because this was the last down candle that had that rapid bullish move that engulfed all of this prior price action. So again, there is a lot of orders present just in that candle there. Upon a mitigation, I do believe a lot of buy orders will be present, and my take profit is at this level here, and just scaling into why it's at that specific level. So again, just scaling into the 1 minute time frame, we do have these relative equal highs that need to be swept. In addition to that, we do have this last down candle before the up move that took out this prior high over here. So this is something I'm interested in. Would like to see a mitigation of that candle, possibly take a hedge trade lower to sort of catch a retracement on USD CAD. And then it's either be a retracement to continue long, or we could ultimately see a major sell-off sweeping 50 pips of these relative equal lows / double bottom. But that all depends upon what the dollar does. So that's something I'll be keeping an eye on, as well as the dollar is heavily correlated with USD XXX pairs, positively correlated in the sense that wherever the dollar does, USD XXX pairs does. So yeah, that's basically all on my watch list. I hope you enjoyed that video. Hope you found some value out of it. And yeah, if you've got any trade ideas or anything you want to portray in the group, message it. If there's any questions you want to message me individually, please feel free to drop me a message. And thank you once again for watching this video. And yeah, let's smash this week.